Welcome back to the Startup Saga, where we explore the founder's journey from spark to scale. In today's episode, we're stepping beyond borders into one of the most exciting and complex stages of building a company, the international expansion. Going global opens enormous opportunity, but it also introduces new challenges: cultural nuance, regulatory hurdles, leadership adaptation, and a reality that what works at home doesn't always translate abroad. To help us unpack what it truly takes to scale across geographies, we're joined by someone who has lived this journey at the highest levels, Bernt Klein. Bernt is a hands-on multinational executive and entrepreneur with a strong track record of building and leading high-performing teams to commercialize and scale deep tech solutions across industries and international markets. Over the course of his career, he has held senior leadership roles across North America, Europe, and Asia, including serving as senior vice president for Siemens in the Americas, as well as leadership roles at Bosch and T-Systems. Today, Bernt is the founder and CEO of EXTIGON, a cross-border deep tech venture builder, and serves on boards and mentors startups across Europe and the US. His experience spans energy grid software, digital twins, telecommunications, healthcare IT, and venture building, giving him a rare perspective on scaling technology across both corporate and the startup environments. What makes Bernt insights especially valuable for this conversation is his deep understanding of cultural nuance. Having operated across the US, Germany, Mexico, Denmark, and beyond, and his ability to bridge European precision with American commercial speed. In this episode, we talk about when to expand internationally, how to choose the right market, the realities of entering the US from Europe and vice versa, and how leadership must evolve when we're building teams across time zones and cultures. If you're a founder thinking about crossing borders or already navigating the complexities of global growth, this episode offers both strategic clarity and practical wisdom. Before we jump in, we have prepared something you might find valuable. We created a free library of resources related to every episode in the Startup Saga founder journey. These resources are created by our guest speakers, and they will offer you practical support on your journey. Make sure you subscribe in the resource library on the link from the show notes. Let's jump in. Hello, Bernt, and welcome to the Startup Saga podcast. It's really good to have you here.
Thank you for having me. Hi, how are you? Good morning.
Good morning. We're super excited to talk to you about this exciting topic, expansion and internationalization. I think this is on the mind of many founders. And we can jump right in with, I think the first question is that really a lot of founders dream about, this topic of internationalization. But the question is, when is this expansion really a smart move in your experience?
Well, a smart move is only then the right timing to do is if you have 5 things in place. First of all, you have to have your strategy in place. Your product has to be stable. You have to have the people to support a globalization or introduction into a new market. You have to have the processes in place, and then you have to have the capital in place. If you don't have these things aligned, many companies experience things that they regret afterwards, and then they have to retreat from the market that they didn't prepare properly. So preparation is absolutely key for globalization.
I have this assumption that a lot of companies underestimate the complexity of this. And when you say everything should be in place, they might think, okay, it is in place, but in reality, it's not in place. What do you think causes this misalignment in some cases?
Well, and the misalignment is that people, let's say founders, right? They normally are launching maybe in their known market, in the home market. And then they hear, let's take the example of the US. They go to a trade show and see what huge market opportunities are in the US. So they are assuming that the successes that they have, or the small successes they have in their home market, they're going to be able to replicate that in other markets. Now, they say, okay, we have a good pilot, we have good references in Germany. Now we're going to expand into the US. US works totally different. Germany is very technical oriented, very stable oriented, stability oriented. The United States is all about showing the outcomes, showing what is your vision, what's the market potential for your product, and then they want to see a big growth. So it's underestimating the risk of entering a market that they don't know properly is probably the biggest failure cause.
Hmm. And what would you say, what is the biggest myth founders have about entering the US or expanding beyond Europe? How would you summarize that in like one big myth?
Well, it's a big market, and if it's big, it's easy to enter. And
Mm.
it's exactly the contrary. People underestimate the humongous amount that you need on people and sales resources and capital to have a solid launch. If you don't have those four line items that I just mentioned, strategy, product, people, process, and capital, you will be in the middle of, let's say, launching a product, you have a pilot, and then suddenly you don't have the support resources, let's say in Germany, to support that pilot. So the biggest myth is it's large, it should be easy, there's a big potential, so let's try it out.
Mm. Choosing the right market's difficult though, isn't it, for a lot of founders? So in your experience, Bernt, how should founders evaluate which country they might enter
Very, very,
first?
very good question, Nick. They should choose a market that is as close as possible to their home market. Let's say if you're successful in the UK, look for markets that have a similar customer, let's say similar customer base, similar purchasing behavior. So try to, in order to minimize failure, look for similarities. That's the key. The other topic is that we work with companies entering new markets. Are there any subsidiaries of your current customer base in the UK? So if there's a subsidiary, let's say in Ireland, or it's a subsidiary in the US, look for those patterns where you can say, look, this we can replicate. Or you have already a customer in the UK and they have a subsidiary, you can assume that that customer will probably have the same buying behavior than in your home country, the UK. So try to find those patterns. Don't go just by, oh, there's a huge market. We were at the trade show. I have a business card. Let's just try it out. That doesn't work.
Mm. Yeah. You mentioned earlier about, the five things that businesses need to have in place to really be ready for internationalization. Um, People, process, product. But within those sort of different elements, what signals will tell a founder, a leadership team that the company is ready? What sort of things should they be looking for in the context of those five,
And
things
that
that
you
you
have
mentioned?
in those five core areas, you have a stability in your home market. Okay. So if you're
Mhm.
still working on your product, let's say, you're still trying to finalize the last software release, don't try to go global if you're still trying to solve those issues, okay, in your local market. Processes, if you don't have a established sales process or a decision process, you can assume that, let's say you're putting a sales VP in the United States, and this person is just waiting for answers in headquarters. you can assume that he will have difficult in closing business. So to answer your question is have a certain stability in all those things, including capital. Let's say if you're underestimating the amount of money that you need to enter any market, you might be stuck in the middle. Yeah, you have maybe a successful pilot, you have done good steps, but if you don't have enough money to expand beyond 2 or 3 customers because you don't have the resources, then you will have a problem.
I think that's an interesting one. I remember having a conversation with a couple of recently seed funded startups that were looking and eyeing the US market. And I sort of said, guys, you haven't got enough money to pay the salaries you'd need to pay to hire somebody in sales and customer success, for example, in the US. So, yeah, I think it's important that, as you said, all of those things are in place, and funding and financing is definitely an important one. You mentioned people, and in your experience, when companies do internationalize their business, what's the best strategy that they could take in terms of, is it better to take someone who knows the business, for example, and deploy them in the US maybe, or better to find someone who knows the US market and hire somebody, for example, to help that expansion?
Nick, the right answer is a mix, and depending on which stage you are.
Mm-hmm.
Obviously, if you're looking for entering a market, you need local salespeople. Why? You have to have the network. There has to be a certain pedigree on experiences entering specific sectors, and the mix will be supported by, let's say, engineers, people who can do demos out of headquarters. You're not going to replicate immediately the structure that you have in headquarters and build up this from the beginning. So it's a mix and it's a step approach. Normally when we launch companies in the US, partner first, get an understanding. Partnering means distribution channels, distribution partners, like we do with some of the companies. EXTIGON does that. And then once you see that there's positive reaction in the market, you're getting some momentum, then it's a time to establish the resources, local and global, because you might have a consolidated customer success resources close to engineering. So you have to really find the right mix, what is needed in the specific market that you're entering.
Well, one of the things you mentioned earlier in one of the questions that Yulia asked was about, the often misjudgment that people make, especially when expanding in the US as a European company. Expand upon that a little bit. Why do companies sort of misjudge that market, and what are the sort of pitfalls that they can fall into expanding from Europe
Well,
into the US?
there's big differences, right? So if you're selling in let's say in Europe or specifically in Germany, trust and technical features are key, right? You're selling technology, and people believe, most of the startups are coming from the technical space, that because I have a great technology, it's going to sell by itself. Now, if you go to the United States, it's all about outcomes. People look less into the technicalities. They look into, okay, what is this product gonna bring me to be more successful as a company? And that's the big differences. They look into fast growth, they look into big vision, where are you going, how they're gonna make, by partnering with your product, how am I gonna be more successful in the future? And that's where markets are completely different.
Yeah. I mean, flipping that around a little bit, and thinking at it from the perspective of maybe a US company coming into Europe, what do they underestimate
Well,
about
it's
Europe?
very interesting because startups in the US that are entering Europe, they think Europe is one. You know,
Yeah.
my first years in my professional career was running different countries in Europe. And I can tell you that every single country is completely different. Um, so that's where they underestimate. They believe, okay, it sounds like EU, and it's one market, and every single market has different laws. And with that, you cannot assume that you're going to be expanding into Europe at once. You will pick again the recommendations to the companies we work with is look for similarities to your home country and then start and building up. Maybe, from the US into the UK because there's not a language barrier and things like that, or Ireland, see where you have any links or any relationships and then start from there. Because if you have the language barrier, don't assume that every single European country is going to be speaking properly English with you, right? So that's another component that you have
Yeah.
to consider.
I mean, I think that's so true. We even see that with European companies expanding within Europe. If you want to work in France, there are certain parts of the French market where if you don't speak French, they're just not going to talk to you. And equally in Germany, we think about companies expanding into the Mittelstand, for example, in Germany, and there's still some very traditional companies that simply don't want to do business in English. And more often than not, companies assume that they will, and that can be their downfall.
That's what we were talking about, Nick, just before we entered. I said how interesting it is to see a bit from Eastern Europe when you want to go to Western Europe, or a Western European country wants to establish a factory or a business in Eastern Europe or in the southern part of Europe or northern, how many things you have to be aware of. And one important one, and I would love to go into the subject now, is the cultural aspect. And I'm curious about your experience, Bernt, about how different it is to sell, for example, in Germany, US, or Asia, or other parts of Europe beyond the language barrier that we mentioned before.
I can write a book about that if you want.
Please, yes, we have time.
Okay, so let's start with Germany. Germany is obviously trust and technical details. Again, if we're working with German startups, there's always the belief technology sells, right? Now, I mentioned about the US, it's very much outcome and sales and growth. Now, if you look into Asia, is a lot of trust and long-term relationships. And Asia is not Asia. Selling it to Japan is a totally different ballgame than selling it to China or India. But I would say Asia is more on the relationship side. Probably Japan is the more extreme on that side. If you don't have long-term relationships, it will be extremely difficult to sell in. China is a little bit different. They're fast movers, but it's as well relationships. And then within Europe, it's more on the technical side and the trust side and stability than fast growth,
I think Eastern Europe is also similar in this aspect. It's also very much trust, but on the relationship side, trust, not so much the technical side. This is what I've been noticing. And like you said, there's also some countries in Asia. Also, I think it's the relationship aspect is so important. Do you have an example where cultural misunderstanding slowed down the momentum of expansion or internationalization?
Oh yeah, I have enough, but maybe the most recent one is you're trying to enter the US market, and then you have a high level sales pitch, and you're just focusing on technical capabilities. And you see immediately on the other side of the table, everybody is coming with the expectation that you're going to show the vision, you're going to show where the strategy is and where the long-term growth is, and how you're helping with your product this company or this customer you're trying to approach. So there was a total disconnect on the expectation from the customer side and the company pitching purely technical features, purely technical. This is what we can do, going to the nitty gritties, spending a lot of time on those things rather than looking into the big picture, the big vision on what you're trying to solve for your customer.
Hmm. So that was something that slowed things down, and then they had to change, or what would be a good outcome from this when they realize, oh, we did this completely the wrong way.
It's all about understanding your market requirements and how you have to adjust your messaging. You know, if you just have to know, and that's part of the strategy, you have to understand the market and you have to understand the competition. Once you know how that works, and that's why the preparation is so important. If this comes as a surprise, then it means that you were not well prepared understanding the market requirements. So that's why I'm always saying spend a little bit more time on the 5 line items that I mentioned at the beginning, and then you will be less surprised about a meeting that didn't go as you were expecting.
Thank you for that, because actually my next question would have been about how much you have to adapt your messaging and your positioning to the new market. And the lesson here is do your homework, spend more time then, and
Yes.
understand.
So if you have your messaging, obviously, if you're already, let's say, close to Series A, let's say, and because that's normally when you go into expansion, right? That means that you have already some years of experience, checking your messaging, but you have to assume that that messaging has to be adjusted as you go and to the specific requirements of the market. You cannot just copy and paste and say, okay, this is our USPs in the UK and Germany and in France. And then you go with the same USPs over into the US, you will see that there's a mismatch.
That's very good advice. Thank you. And so there's, on one hand, entering a market and looking at this topic from terms of the clients, but what about when you have teams across different time zones and different cultures? How should leadership adjust, and what is required of them, do you think, if they manage across all these time zones and cultures?
Oh, very, very, very important question. So you definitely have to have a clear communication path. So you have to have your rules of communication and the decision processes. So communication path means, do you have regular reviews with your teams that you're establishing somewhere else? Do you have regular checkpoints where you ask, so what are you guys needing? What's the feedback from the customer? What do we have to adjust? And then the decision process. Okay. I can give you examples where a company just hires a VP of sales in the United States. The person has great relationships, but the infrastructure is not there to support them. So that means he's discussing with customers. You need a sales pitch, and you have to wait 2 or 3 days for a sales pitch, and he has to move out his appointment because he doesn't have enough resources, or a demo. If you have to wait for a demo for a week or something, and the person is just waiting to get things moving, you have to consider that in your management style, your processes, and also if you have those in place, you will avoid these mistakes.
Thank you.
I have an example of the company that they hired the salesperson, and after 2 years they asked, so now we spend a lot of money, and everybody was asking themselves, so where did we fail? And I can tell you it was the support functions, demo, marketing, pricing,
Yeah.
product features, messaging was not there. Just hiring a sales guy doesn't mean that you're going to be a successful company in that market.
That's so true. I'm working on a project now, and it's a company who wants to enter Germany, and we're spending also a lot of time understanding, okay, and how will this person understand, for example, your culture in the company abroad, and also who's going to support this person when they go out and they start to build the trust with the clients on the market. There's no brand recognition yet on that new market. Who is going to support this person, and how are they going to do that? And I think this is something that I see also on LinkedIn. A lot of times people write, okay, we hired a account executive in Germany, and after a year and a half, nothing happened. And then they come these questions, okay, but did you have pre-sales? Did you have infrastructure? Did you have all these things that you mentioned? I wonder what's missing? Why is it that they don't think about these things, and they just don't take the advice of all these other examples that are so public and so freely available to read about at this in our times? And it's still like a question mark in my head. What do you think is the cause of this?
It's the ambition, right? It's the ambition. And that's probably the most question and discussion I have with startups in whatever stage they are, right? They they have great ideas. They want to grow fast because that's what you're supposed to do as a startup, right? And then they go to a trade show, they get a contact, and that contact develops into a potential pipeline or sales situation, and then they grab the opportunity, right? So they jump into it and saying, oh my god, why not, right? So now you're in the middle of a sales situation, and then you're saying, oh, but now I need the person, the technical person who flies into whatever country this is. And they say, oh my god, we don't have the people, we just have one expert for this software solution, and now we don't have it. So it's basically the ambition, underestimating, as we talked before, and then obviously maybe they don't have the advice from people, let's say like us. They're saying, okay, do your steps, do your homework, check this one out, maybe think about working with partners first rather than just jumping and trying to grow faster than you can, right? Because you will have limitations while growing. Very few companies have enough resources to grow, let's say 40, 50, 60, 70% a year. Very few companies, and it's a shame if you have already built up a relationship and you could do a business in a country, and then you have to pull back because you don't have the resources or the capital. That's the other thing, is people think this is cheap. Oh yeah, just put a sales guy and that's gonna work out. No, you have to have all the structure, and that structure normally is much more expensive than you think, because you have to hire locally, you have to hire in that country, and then never underestimate the legal costs. That's the US. Everybody underestimates the legal costs. $400 an hour for a lawyer in the United States. It's tremendous. And if you want to review your contract, you can assume that you're going to be spending several thousands in just reviewing contracts. Also, another thing that people underestimate.
Thank you.
think the legal side of things and the contractual side of things in any market that you go into is a blind spot a lot of founders encounter. So from your perspective, Bernt, those regulatory tax blind spots, what are the biggest? Where do founders often come unstuck when globalizing? What do they miss?
It's basically the tax laws. It's being 100% sure which tax laws exist, corporate laws, employee laws, people management.
Mm,
In the US, there's very, very strict rules on how to behave with employees. When I was delegated to the United States 26 years ago, I had to go through a very rigorous training. It was 3 days. This is not, there's very strong legal implications if you're making the wrong comment in a meeting. And those trainings were extremely important for me because it's managing people, you know, it is managing the customer, in having all these relationships, contract management, the legal side of the contracts. Those contracts are very, very, very tough because for sure, if you're dealing with
mm,
large companies, let's say automotive industry or something, you can assure that those contracts are brutal, and that's
yeah.
another thing people underestimate is, um, there's not too many spaces for negotiation. More if you're a small company. That's the biggest issue that I encounter when
Mm,
we're launching companies into the US is, although we give our comments to contracts, large companies, they don't change those contracts. They leave it as it is, and then you have to see what is the legal implications of that contract. Does it have implications even in your business, in your home, the headquarters? That's some of the things that we're evaluating with some of the companies, is what is the legal implications for the mother company if you're doing business in the United States.
Quick pause for a moment to mention one of our founding sponsors for the Start-Up Saga podcast, Alexander Daniels Global. At Alexander Daniels Global, we work closely with founders, scale-up leaders and investors to help build leadership teams at the moments that matter the most. One of our key focus areas is C-suite and leadership search within technology, deep tech and innovation-driven businesses, often at points of rapid growth, transition or uncertainty. Over the years, I've had the privilege of partnering with founders as they make some of the hardest decisions in their journey, who to trust early, when to strengthen leadership, and how to bring in the right people to turn vision into execution. We work alongside investors, helping ensure the teams behind their portfolio companies are set up to scale sustainably. At its core, Alexander Daniels Global is about helping companies build teams that don't just look good on paper, but actually work. Teams that can navigate complexity, pressure, and growth without losing their direction. To find out more, you can visit our website at alexanderdanielsglobal.com. Yeah. I mean, you mentioned there the hiring challenges a little bit in terms of, understanding the different employment laws, for example. And I think this is something that I see when we're talking to European companies who are looking at expanding in the US, when they're ready to put, boots on the ground. I think they don't understand that while the US is one country, it's 50 different states, and that state by state, the employment laws are very, very different. In California, it would be very different to Ohio and Michigan, and then it will be different again in New York and Massachusetts, for example. And so, in your experience, because I guess a lot of founders, might be interested in this. Are there certain states, for example, in the US where it's maybe more attractive to be based, less attractive to be based from an employment perspective? Or, any advice that you generally or typically give founders when considering where they might want to base themselves?
We normally advise the companies to be as close as possible to the customers. I think that's crucial. I would put the legal issues a little bit aside and the tax things, because if you're building up a company, it's all about speed and being close to the customer. You have to have a very, very close relationships during your piloting. So if you're running a pilot in a completely new market, that pilot will define your future. Because if you have a successful pilot, you have an order, and that's going to be your reference. And if that was successful, you can replicate. So I would put the priority less on the legal tax side. I would always put it where you're the closest to the customer. And you can put an Inc., let's say, establishing a company in Delaware. That doesn't mean that you have to be sitting in that Delaware. You have the Inc. in Delaware, and then you have your entity, let's say in Atlanta, because that's where your customer base is, or in California or Northeast. Try to be, when we're working with companies in defining the plan of attack, look into exactly, Nick, what you said. Look into where your customers, where you're able to replicate what you do with one customer. Let's say automotive industry, you know exactly in which areas they are. Try to be there, right? Because there's going to be a second customer, it's going to be a third customer, a fourth customer, and so forth. So try to really not spread all over the place or being completely remote just because of tax reasons. I'm moving to Seattle or to Florida, whatever, wherever it's convenient for you. Look for how can you move your business fast and have a close relationship to your customer.
I think that's good advice. I want to come back to something that we have already sort of spoken about a little bit, which is in that initial sort of setup phase and expansion phase. When you look at internationalization, quite often a good route to enter a market would be finding a partner, for example, a distributor maybe who can seed the market for you before you expand. How should startups think about that, and what should they look for when finding the right kind of partner or distributor for their solution?
Nick, it's almost as difficult as finding your customer, because first you have to answer which customer am I addressing? Let's say automotive industry, and if it's automotive industry, who is that in that supply chain? Then you have to look into who are the partners who have that relationship into the automotive industry, and then building on that, you're gonna be doing your assessment, same as you did as you will be entering by yourself. What's your strategy? What's your product? What's your people? Because a partner will not just say, okay, here's a contract and I will run. You would see in those partner contracts, and we do that with companies. So we help, EXTIGON LLC helps companies through distribution contracts in entering markets in the United States. And normally in those contracts, we include the technical support that we need in order to win business. Because it's let's say if you're familiar with the industry, but you don't have the technical capabilities with this company, because normally these are very highly skilled technical solutions. You will not find a distributor that has exactly those capabilities, which means that you have to support that partner, similar to your VP of sales who is sitting in Dallas or whatever. You have to have those resources in place to support that partner. So doing your homework, saying, okay, that's my customer base, which partners are in that space, and then look what capabilities does that partner have from themselves, and how much do you as a company have to provide to the partner. So it's a very thorough process as well. And Nick and Julie, I don't want to say that everything is difficult. Don't assume that. If you do your homework, there's great business everywhere. It's great way of getting into the United States. The only thing, the case I want to make is do your homework first rather than just run.
Yeah.
Yeah. Well, I think there's a lot to be said about working with partners, and it's certainly in some countries it's almost a necessity. You mentioned Japan there. It's very difficult to enter Japan without having a local partner because of that trust and local relationships that they will already have developed. And I think, supporting your partners, one of the things that often gets overlooked, and again, this comes from my experience of working with companies who are expanding globally, is providing marketing material, for example, in local language, just assuming that, English will be accepted when actually it probably doesn't. And then being able to translate that into, the same meaning that you intend it is often difficult. So there's lots of challenges, I think, when you look at that kind of globalization. Another that certainly hit me and my business, obviously we're split between Germany, we do a lot of work in Europe, we're a UK based company, we do a lot of work in the US. And I remember the one time my finance director coming to me and talking about the fact that the dollar was shifting against the pound, and that was going to have a significant impact on our bottom line because we recognize the deal at this level. And then when we transfer the money back into pounds, it was a different value. What are the sort of currency and financial planning considerations maybe then that founders need to model before entering a new region, whether it's from Europe to the US to Europe, or even Asia? What are some of those things that are important?
The tax thing is just one thing. I would say my advice always is, please assume three things. You're going to need more money. It's going to take longer than you thought. And it's going to be a little bit more difficult than you thought. Okay. If you know these things, then you're prepared for what is coming. There's no cheap way in. Obviously you have to do your homework. If we talk about business planning and so forth, do your homework, the exchange rate, but always include a buffer. That's the biggest thing that I'm suggesting people just put a buffer aside. Because just as an example, as I mentioned before, let's assume you're going into a contract negotiation, and this contract negotiation goes back and forth, back and forth, back and forth. And then suddenly, oh my God, the legal bill is 20,000, 25,000. And for a startup, that's a lot of money, right? And then you compare it with Europe and say, why is this so expensive? Next thing, you guys are in people management. Same people in Europe think that the salaries are the same in the United States, right? they're not, right? And then you say, oh my God, no, we cannot afford another sales guy. We just need one. And the guy cannot, manage all the customer requests and so forth. So assume those three things: more money, slower, and more difficult than you think. If you follow those rules, then you should be fine.
One question just comes to mind very quickly on that. Pricing, because again, you think, okay, we price this way in, say, Germany. We know what the euro exchange rate is with the dollar. do we just price based on the exchange rate, price the same, or do we have to price differently? Because as you just said, salaries are going to be higher in the US. So, how do we think about pricing, when, expanding between
I
territories?
would give my secret of business of 30x years, right? Always try to achieve the highest price at the beginning. You know, I I I I can give you tons of examples where the salespeople came to me and said, "You know what, Bernd, let's be aggressive and let's get in." Okay, and I said, "Why not the other way around? Let's try." Obviously, if you have a USP or the customer wants and needs your product. That's the assumption, right? So, assuming that you have a good and successful product in other parts of the world, try to go as high as you can if you're entering a new market. Because you will see that over time, specifically in the US is very price sensitive. Try to put a little bit of buffer, same as with your financial planning, in your pricing. And then rather than going low from the get-go, because then you can be assured that they're going to push that price down as you go. Start up and then slowly adjust to what you feel the customer is willing to pay for the solution or the product. And don't translate the price that you have in the UK just by exchange rate and put that price. Uh-uh. That's not how it works. It could be that the price level of a specific product in the US is much higher. Let's say in software, US spends a lot of money on software. They used to have big tickets. Europe is different, because the appreciation of software in the US is a different one than in Europe. At least that's my experience.
Thank you. I was smiling so much when you said these three things. It's going to take probably longer. It will cost you more. It's going to be probably more difficult, because I imagine building a house.
No, it's just
When you build a house, it's true. These three things could be true also for when you're building a house from scratch, for the first time, especially.
yeah.
I would like to talk with you a little bit about the leadership aspect again. And I'm curious, from your experience, how many founders, or what percentage do you think of founders are truly prepared to scale their leadership as they're scaling internationally? Or are they even aware that this is something that they should focus on?
My experience, and obviously it's not the total market, it's a learning process. Obviously, um, startups cannot have that know-how, right? So that's why they go to accelerators or get in touch with EXTIGON to help them to enter a market and so forth. Um, I think these are blind spots that they cannot know because they don't have the experience, because maybe they're coming from a technical field and they have been developing this. Maybe they're just 5 years or 10 years in business, rather than established companies who know all these things over generations. So um, the most of the cases, they don't know these things, right? Why should they? They think, okay, if I'm in Germany, technology is working. I have customers in the automotive industry. It's working well. So why shouldn't it be exactly the same in other parts of the world when it comes to managing people or leadership style or expansion? One thing is clear: you have to adjust. You have to have your processes in place, meaning communication. You have to have your decision process in place, and and basically when you're building organizations, try to make a mix between local and your home base employees, so that you're starting in creating a replica of your home base in a different country, because that should be the target, that region is as independent as they could, which obviously for a startup at the beginning will be impossible. You will have some resources locally, and the other ones, let's say technology development, all these things are going to be at home, wherever you are. Assuming that you're going to be replicating everything in a different country in the first 2 or 3 years, that's the wrong assumption. You have to go step by step, depending on how business develops as well.
And what do you think is the most difficult leadership adjustment that founders must make when they go global?
Let go, because founders normally are involved in pretty much everything, right? They in 1 hour they're in sales calls, the next one they're talking about organization, so they're doing pretty much everything. But as you grow, and you guys, Nick is the expert in this, as you grow, the organization has to grow and the leadership style has to grow. And in some cases, you have to ask yourself as a CEO or founder, are you really still the CEO? And I have asked startups, now we're in our 5th or 6th or 7th or 8th or 10th year, are you still the CEO? I've been in meetings where I'm asking every single person in the management team, do you still feel that you're the CTO? Or are you the CEO? Or maybe there's somebody else from outside that can take that role. And we know that from examples, when successful startups starting growing, they're bringing other resources in order to assume those roles. That happens a lot. Why? Because they say, you know what, I'm more the technical guy. I don't want to be the CEO. I don't want to be constantly in front of customers pitching or trade shows and speeches, and that's a very, very interesting transition. And some let go and recognize this and step aside and do something else. But in most of the cases, that's basically the evolution of the company.
Are people surprised when they hear this question from you?
Some are, and some are not. But there's an interesting spin to that. Not everybody is completely open. So
shocker.
and Nick is the expert on this, because he's on the hiring side. For sure, I'm the CEO. For sure, then. And then you ask the question, okay, if you're the frontline sales guy as a CEO of a company, how much time are you willing to be on the street? Because that's also maybe a hint. While comparing startups in Europe and startups in the United States, the successful startups in the United States, the CEO and founder is the best sales guy or girl. Yeah, they're out there. And here, in Germany is almost the opposite. They're taking care of the technical side. They're sitting there managing R&D and but they're not on the road.
I think that transition from a founder entrepreneur into a CEO is a difficult one, especially for a technologist sort of CEO profile, because inevitably, if you're scaling to a point where you're big enough to go global and internationalize, then the majority of your time as CEO is either spent with investors, because you're always probably in some form of fundraising round, or with customers. And so that role really does change quite significantly. And I know Julia and I have spoken a lot about this. And I know through the work that Julia does at the Dragon Coaching House, working specifically with founders on this transition is important work, for sure. You mentioned then, the difference between, say, for example, US founders and maybe European founders. What about investors? Do you see differences between investor expectation between US and European investors, for
yeah,
example, as well?
totally different. As you can assume,
Yeah.
Nick, European investors are more about stability, stable growth, stable returns, lower risks. And then if we go to the other side, in the United States, they're willing to go pretty much into risk. They want to see fast growth. They're less patient. They want to see results, and they're willing to shake up the company. There's a much lower tolerance in accepting that a company is not delivering the results that they promised. So that means coming back to your thing on the investors and what's the impact on the companies. They have a humongous impact on these companies, such so that they define the strategy, they define your priorities, and depending on how happy your investor base is with your outcomes or your performance, they will either jump in and try to change things and even have impact on your management team, or they will let you go in the case of you delivering the numbers that they're expecting. But yeah, there's a difference. There are much more patience in Europe, willingness to let's give it a time. Let's this needs time. Let's work through the things, rather than the US where they're pretty less patient.
Well, I think that's interesting. I saw some statistics, and I wish I could remember the exact numbers, but it was at a portfolio event that I went to last year, and that actually European venture capital has outperformed American venture capital over a period of sort of 20 years if you stacked it up. And so maybe that suggests that more patient approach is a more viable one. You maybe don't get the big returns that US VC does, but you get more consistent returns over a longer period of time. So certainly interesting to sort of see those differences in action. We're in the final steps now. We're going to ask a few quick fire questions. I'm going to start with one, and then I think Julia's got some to sort of throw at you. So, short, sharp answers. If I'm a European Series A funded, or just recently got my Series A funding, I'm a founder and I want to launch in the new US next year. What's the kind of one piece of advice you would give me before
do your
I do
homework
that?
first, and then enter the market. As I said before, spend some time. Don't just jump. That's a mistake.
Yeah.
Is there a region that you believe is systematically underestimated right now?
Very good question, but difficult to answer. It all depends on which product. I would say there's not one market where you say for this or for that. Look for similarities to your home market. Make your market assessment, and then don't jump just by the market volume that is there. See how your product fits into that market. So it's not one fits all, and obviously there's profit pools everywhere in the planet. Everybody would say Southeast Asia, but I would say there's even profit pools in Europe. There's profit pools in Latin America, profit pools in the US. So it's depending on what product you have and what stage of development you are.
Thank you. Nick, you had another question.
Yeah, I mean, I was going to ask, we've talked a lot about mistakes, I think, that people can make, but how would you define success in international expansion? What would that look like in
Very
your
simple
opinion, Bernt?
answer, Nick. If your second deal that you're closing is closing much faster than the first one. Your first deal, it's probably going to take you 18 months. And you will see if the next one is faster, and you're starting and closing in months, that's success. Because that implies that you did all those 5 things that I said at the beginning. You have the right resources, you have the capital, you're doing your reference, you have your pilots, you have the people. So once you're close your first deal, you learned everything locally, and then you can start in replicating. And that moves basically your closing timeline into a much faster. And you can have 3 customers at the same time. At the beginning was just 1.
Thank you so much. I mean, this has been so valuable, so interesting. Where can listeners follow your work and learn more about your global scaling experience?
Well, it's 2 ways. One obviously is LinkedIn, and then on our website, just get in touch with us. Nick and we work closely together, so we can be in touch on those 3 paths through Nick, through our website, or through LinkedIn. I guess you can find me anywhere.
What's the website, Bernt, just for our listeners, so they can go there if they want to see more?
We're going to put a link into the show notes so that people can just click on it. Thank you so much.
Very good. Thank you. This was a lot of fun.
Thank you.
Have a great day, guys.
Thanks.
See you. Bye-bye.